producing. And I felt this pressure, that there was no way to fill the gap. How was I going to get the production up? And that opportunity came on June 16, 2002. That's the day I got a call from my friend Keith, who was a hedge fund manager who had $6 million at Bear Stearns. Keith called and said, "Can I transfer my $6 million hedge fund to UBS?" I said, "Of course you can. I'll come over this evening. We'll get the paperwork signed." Hung up with my new client. I ran into my senior business partner's office, and I hugged him. I was actually jumping up and down, again and again, again and again. He said, "Why are you so excited?" I said, "Our problems have been filled. We're solved. Our production levels are going to go up." And my business partner said, "Why?" I said, "Keith, a friend of mine who has a $6 million hedge fund is going to transfer it to UBS, and he trades like crazy. All we have to do is execute the trade on an unsolicited basis at 10 to 20 cents a share. Transfer in $6 million. They'll call tomorrow, next week, 50,000 shares, 100,000 shares. We charge 10 or 20 cents, unsolicited, no risk, we're rich." My senior partner said, "Great, what do we need to do?" I said, "There's nothing you need to do, but there's something you need to know." 5 years ago when I got into the brokerage business, Kenny, my partner, I worked with Keith. He was in the cubicle next to me when I got into the brokerage business. And I heard some of the things that Keith was saying on the phone in order to close deals. I heard the misrepresentations that he made. For example, Keith on a Monday morning would call the trader and say, "Give me a block of 50,000 shares of Apple." By the time the trading day had ended, Keith had found a way to allocate that 50,000 shares amongst his book of business. He'd lie if he had to place that stock, but he always got rid of it. So 5 years earlier, when I worked with him, I knew he was unethical. But those perceptions didn't dissuade me from accepting his account. I knew how much juice he would generate. But I knew that day something bad would happen. I knew something bad would happen, so we had to protect ourselves. My client, the hedge fund manager, transferred in his $6 million. First month he does $25,000 in trading commissions. Next month he does another 25. Third month he does 50. Fourth month he does 50. UBS loves me. Qualified for a weekend trip in Hawaii. My senior business partner said, "I knew you were worth the risk. I had a good feeling about you. I felt good." But something happened during that first 6 months of my client's tenure. The first $6 million that he transferred in, he lost it. Fast forward another 6 months, he raised another $6 million. He lost it. $12 million in the first year raised and lost. A flag starts to come up on the monthly activity reports every single month. Heavy trading, complex derivative trades, massive losses. Every month. My client had a string of 100 consecutive losing trades. I hate to say he's the worst trader I'd ever seen. In fact, my business partner and I would do the opposite trade when he would call in to do a trade. It would go something like this. "Justin, this is Keith. Buy 50,000 shares of Microsoft. Hold on, Kenny. Sell short 50,000 shares of Microsoft." That's all the research we did. But after a year or so of massive losses, I noticed something. All of my attention was going to my client that was generating $50,000 to $75,000 monthly commissions. I was neglecting all of my other clients that I had made promises to. They didn't pay me as much. I grew to resent them. I felt they were unworthy of my attention and time. I didn't take their phone calls. I started to give away some of their accounts to the junior brokers, ensuring that I got half of the commissions on the accounts I had given away. All of my attention went to this hedge fund. But after a year, we were nervous. Nervous that if the losses continued, my team and I at UBS could be held liable, civilly. Never think about jails and prison. Wasn't raised to think about jail. So my business partner and I went into my branch manager's office. Said, "We're concerned that this hedge fund's losing millions. We've never been with an investor. I simply execute the trades on an unsolicited basis. But we need to protect ourselves, not if but when the fund loses money." My branch manager said, "What do you have in mind?" And I said, "Why don't you let me create a disclosure letter at UBS? Something that the investors need to sign. So Alan, if you'd like to give $1 million to my client, the hedge fund manager, fine. You need to sign this letter that It says at UBS, we do not endorse, solicit, or recommend this investment. You invest in this money, you do so at your own peril. You cannot sue us. UBS loved it. They applauded us for our ingenuity in keeping this account alive. Ran it at the flagpole, compliant, legal, have an email compliant that says, well done. We appreciate what you're doing to protect the firm and yourself. Didn't think about the losses. Though we knew you don't raise $12 million and lose $12 million, if you're telling investors the truth, don't ever give your money to somebody if they lost 1,000%. So with that letter, this disclosure letter, it gave us reason to act with impunity. And then my client struggled to raise money, needed help from the big brokerage firm, the brokers that were generating massive amounts of commissions. Here's a small favor. My client called me at 12:50, stock market closed at 1 o'clock in Los Angeles. Client said, do me a favor. Send me an email that says I'm going to get 20,000 shares of JetBlue IPO, the airline stock, due to be at several points to open the next day. Send me an email that says I'm going to get 20,000 shares. I said, but Keith, you may only get 500 shares. I don't think you're getting 20, you get 500. He said, I know, send me the email anyway. I put him on hold. I scratched my head for a moment. And then I reasoned, low levels of reasoning, and I told myself, my senior business partner telling me if I keep the commissions up, it's going to bump me from 33% to 50%. I don't want to say no to my client. I'm very much a people pleaser. I always was in business. It's very tough for me to say no to people. Senior manager asks me to do something, I do it. Senior partner tells me to do something or say something, I said it. I knew it was wrong. I couldn't say no to him. I didn't want to disappoint my client. And I learned in prison if you can't say no to people, they're going to own you. And I remember a comment my client said to me, I bet you there's a lot of stockbrokers in Los Angeles who love a guy doing $50,000 a month in commissions, implying that if I didn't help him, he'd transfer the account. It's just an email. We've all sent emails that may not be true. So I sent it. Keith, this is to confirm you're going to get 20,000 shares of JetBlue IPO. Sent it. That's wire fraud. It wasn't get 20,000 shares. We fast forward a few months. My life started to fall apart because I was beholden to this hedge fund manager that made up the majority of my income. I started to hate my career, my life. I hated that my parents would introduce me to others with their young son, successful stockbroker, whom they were proud of. I knew that I was obtaining money, huge commission checks by way of a fraud. I hated it, and I stopped caring. I put on 30 pounds, I was drinking, I was smoking, I was engaged. She left. I hated my career. When you stop caring, there's just about anything that you'll do. And I did. 6 months after I sent that email, my client called and said, I'm on my way down to your office right now. I need you to attend a meeting with me and an elderly investor, Abe, who gave me $3 million several years ago. And I told my client, please I don't want to be in this meeting. Do not put me in this meeting, I beg you. He said, it's too late, I'm on my way down. I didn't question him, I accommodated him. He owned us. He walked into my office with Abe, who's an elderly investor. Abe had 2 advisors with him. We sat down in my office, and after about 10 seconds, one of Abe's advisors said to me, Justin, do you think an elderly investor should have $3 million in a basket of growth stocks? And when I heard that, I knew something strange, because right before the meeting started, I knew that my client had less than $1 million in his hedge fund. So clearly, if this advisor thought that his client had $3 million in assets he'd been lied to. Well, when I don't know something, I scratch my head, and I try to address it the way I was taught. As our letter of disclosure advises, I'm not responsible for managing the money. This letter that your client has signed states that I'm not responsible for managing this portfolio. You've hired Keith, your hedge fund manager, to manage it. I answered the question truthfully. Then the advisor persisted. I said, Justin, I see your USC degree. I see you're a vice president.